obviously one of the big items is, down payment, and based on, even a, beginner or expert, at acquiring, commercial real estate, based on the asset type, there's different requirements for down payment.
Yeah, I get that question a lot.
Yeah.
How much do I need down? People,
Yeah.
they think they can get a no money down loan like they can on a house.
Absolutely.
And then they automatically jump to SBA.
Yeah, and I mean, a lot of people want to go through a conventional workup where SBA is not involved just because there's not as much paperwork involved. It is a simpler and a faster transaction.
Okay.
Just having that down payment and knowing what that is in advance really allows you to plan to budget in advance of that transaction. And that differentiates between different properties, because some properties qualify for different financing, and so from little 15% down, you may have as much as 35% down.
Okay.
And so there's some wiggle room. There's some whether based on your financials, your strengths and your weaknesses. They may require more, may be less, maybe the exact amount that's required of that underwriting guideline. So,
Okay.
But yeah, it's kind of a moving target on that portion of it. But credit score is obviously one that's it's your personal credit score that just kind of tells you a little bit about you and what kind of good credit that you have, and knowing that and having a good track record when you're building a new relationship. It kind of shows that lender, hey, I have good credit. I have a good track record.
I pay my bills.
I pay my bills. I can repay this loan.
Yes, I will.
Yeah.
I will repay you.
Absolutely.
I'm capable and willing.
Yeah. And just, financials.
Okay.
A lot of people, having, a good accountant, and having a good understanding of your financials, whether that's personal, business tax returns, a personal financial statement. That's just your assets, your liabilities, and what your net worth is, and being able to, itemize and provide a detailed personal financial statement. Having that in advance and having that together, it does make the process go so much quicker.
Okay.
And, a lot of the process, especially depending on how complicated your deal is, but having that ready and having that in advance, it really does eliminate, because the collection time can be kind of lengthy.
And that is exactly why I tell people, just like in residential, I don't show properties until you've been approved by a lender, because otherwise we're just window shopping.
Sure.
And I can't fill up my gas tank on laughter and hugs. I give a lot of that away, and it doesn't repay back.
They're free.
They're free, yeah. They don't have any return except for the emotional part about it. Okay, so that was great. That was great. So can you walk us into expanding on that, but less related to someone that is starting a business? And I say that because I always want to relate whatever I'm talking about in an interview or my social media, what I'm currently seeing. And right now, I'm seeing people who don't currently have a business. They're not operating their business to the point where it's generating a profit or maybe even bringing in revenue.
Right.
And yes, those are different. A lot of people use them interchangeably, and they're not. But they call me, and now they want a brick and mortar. And I'm just like, my heart sinks because of all the things you just mentioned, that they're not prepared. And I always feel like I'm the person that pops the balloon. What type of advice do you have on the lending side to help them be better prepared for when I send them to you?
Sure. I mean, depending on the customer, I don't know how long that they've been in their business, but you hope that they've reached that point where you're 3 to 5 years in.
Okay, so that's the sweet spot. Yeah,
you're turning that profit.
Yeah,
you're not in your first year.
Okay,
From a credit aspect, it looks riskier, right? If you just start a fresh business, maybe that's your primary income, your primary business. That may not be like the best conventional financing, from any small community bank. That may be an SBA opportunity for somebody to look for. And some of your local banks can work with, either they have some internally, that they offer, or maybe it's a third party that they're working with to help you get that SBA financing. But, you know, if you are past that and you are profitable, if, you know, your business is past that threshold and it's going to the point where you do need to grow and you do need that brick and mortar, then yeah, obviously the things that we have spoken about, having those financials, having that credit score, having that down payment, because I feel like down payment's probably, it's the largest capital, you know, expenditure that you're going to experience for a small business owner. Is injecting that, you know, that capital, that down payment, you know, into that brick and mortar, into that building. You know, it's a lot to take on, and so preparing yourself and knowing what target to shoot for that down payment, you know, it's important, because sometimes if you know exactly how much you're earning, you know what your bottom dollar is, you know how long it's going to take you to get to that point to earn that and to have that ready, you know, for that brick and mortar expansion.
Okay, so sweet spot, 3 to 5 years, have your financials, all that.
Yeah.
All right, good.